that since their last meeting in March, they've seen the economic data soften significantly. And I think the leading explanation for what we're seeing in terms of the performance of the economy is that the drag associated with tax increases and the sequester and fiscal policy more generally is having a negative effect on the economy. And the Fed is reminding the markets that it is there. And if these fiscal effects prove to be stronger than what the Fed currently believes,
right. Now,
it is imaginable that the Fed could do more stimulus than what we've seen so far.
The market's off the best part of 100 points, give or take. I'm guessing, and I know we don't sort of take the knee-jerk reaction from that, but I'm guessing that what they're basically saying is it's the uncertainty now in the picture. Fiscal policy restraining economic growth, continuing the policies. It's the uncertainty level.
Yeah, I think that many equity investors kind of see the situation going forward as a no-lose proposition. If we get the weaker data, then the Fed is going to continue to do QE for a longer period, as they've suggested in this statement. On the other hand, if the economy starts showing renewed signs of vibrance and recovery, then rising economic activity is likely to raise profits and also make stocks very attractive. So I think that we're in a period here where stocks are likely to perform very well.
It's fascinating, this, because sitting in this chair in London, I can sort of see, on the one hand, I'm talking to you about the improving economic scenario. All right, it's not brilliant. It's not a rosy picture. But frankly, as seen from the other side of our studio, it's looking a jolly sight better than, say, for example, Southern Europe, where the third year of recession and 30% unemployment is on the cards.
The U.S. is very much benefiting from being the least troubled region. It certainly doesn't mean that we don't have our share of challenges as we look to the future. Dysfunctional government, challenges with an aging population, debt levels, and so on and so forth. But these challenges look like they are manageable, and it looks like that over the next year or so, we're likely to have growth. And I think that's more than we can say about Europe. And in Japan, Governor Kuroda is aggressively tackling those problems. But whether he'll be able to deliver faster growth than Governor Shirakawa is very much an open issue.